Okay, hi everyone. This is Nikki again. Sorry, I was a little bit wrong a while ago with my audio. Can everyone see my can everyone see my Webull platform now? And can everyone see how can everyone hear my audio as well? Am I able to be heard about? All right, guys. So thank you for watching. Today is December 9, 2022. We're still actually going to share and promote the Webull platform on how you can utilize the Singaporean app Webull for the Filipinos out there who are interested to actually read news for free, to actually trade stocks with free commissions and zero commissions for Hong Kong and US stocks. So this is actually a platform that you may want to utilize because it's got a lot of tools and we're actually showcasing some of it to you today. So also as an added bonus, if you use our link, you can actually get a lot of free rewards. One of the free rewards is actually to unlock a $150 cash voucher if you open an account between December 1 till December 31, 2022. So you get free market data, zero commissions when you actually trade your stocks in the US and Hong Kong, and a $150 cash voucher. So for those who are interested to open US markets for 2023, we do want to share this leading global fintech platform. The name is Webull. For those who want to open an account, the Webull platform would look like this. This will be your desktop. And actually, you can open online through your mobile phone. Just go to the Apple App Store, change your country or region to Singapore so that you can see the Webull app. And the Webull app can actually direct you for the trading account platform wherein you can open an account. For those who are Filipinos, you can just simply transfer the dollars directly from your local dollar accounts. It could be your BDO dollar account, it could be your USD, BPI dollar account, or whatever you're using the Philippine markets. That is actually quite useful if you are gonna share if you're gonna be using actually your Webull. I'm gonna share the sharing the app. Kita ba? Check ko lang kung nakikita. Wait lang ah. So I'm not sure if nakita nyo. So for those who are watching, if you are watching, could you kindly comment if you can see my Webull platform? Um, if you can, here I'm actually sharing. Can you see the watch lists, the starter packs? Ay, kita ba? Okay, so I'll just go ahead and actually share, guys. So yeah, I'll go share ahead. So, a few news to actually discuss. As I said, we're going to share Japan's nuclear program, China's reopening, and the upcoming CPI and Fed hike. So, teka lang I'll just check just in case. I just want to know if you guys are actually seeing what I want you guys to see. Wait up. Okay. So you can see my headlines there. Just wanted to check if you can see this platform here. the Webull, the Webull platform. Kita ba? Para nakikita niyo lang yung share screen, no? Wait lang. How do I actually make it screen layout ba? Picture in picture. Let me see Present. Present. Or dapat ito? Nakita ba? Wait lang sorry Yeah, nakikita naman, no? Nakikita yung platform. Okay, got it. So, nakikita mo yung Webull. Okay, so let me go ahead and start with my with just a short class today. So one of the most important news that I was sharing is that Japan has basically reopened their nuclear efforts. They started promoting, developing, and constructing next generation reactors to replace their decommissioned ones, just since 2011, guys. So present through this. Yan. Share. Sorry. Mali. Done. Slideshow. Okay, so you can see that the big ticket winners here with the nuclear power plant reconstruction of Japan is really your CCJ, UUUU. So let's take a look at the charts here. So CCJ has been actually in consolidation mode the entire 2022, here at about 20, with a lot of resistances at 26 and 31. So we think that as it's nearing here 20 again, there's actually a chance for us to buy some CCJ if we have some cash. Okay, so there's several ways to do that. If you have your Webull account, you can click on CCJ. As I said, there's several ways to utilize your Webull account. Once you actually open your Webull account, you can see that there's several ways to actually check. There's this market wherein you can check industries, and then for uranium you can already see all the other uranium names, and then you can read all through it. So you can see UROY, for instance. You want to check UROY. It's also a uranium name. So marami siya, no? You can see the stocks, and then you can actually modify you can check the news on it, on the lithium and uranium royalties, their quarterly updates. So everything is actually nicely being shared to you for free once you open your Webull account. And then if you want to chart, you can do many layouts and so on. You can change your candles, your indicators, you can add your moving averages. So just keep on exploring via the Webull app. Webull app is Singaporean based, so but they're actually expanding in Southeast Asia. So yeah, and there's ways to actually check the daily if you want to check the daily. Tanggalin natin yung mga indicators kung nakakahiling indicators. Tanggal natin yung mga MA, BOL, VWAP. Ayan. Technical signals, tanggalin natin. Pwedeng view, pwede rin tanggal. Okay. So ganyan, pwedeng 1 day, pwedeng 1 week. Ayan. You can see that ganyan yung mga galaw for uranium, UROY. So let's say for those who are looking at CCJ, ayan. So you can modify, you can do the 5 minutes, 30 minutes, 1 hour. So ito si CCJ, this is like what the daily, weekly looks. If you want to check at a smaller time frame, ganyan siya. So very useful, 'di ba? Kasi nakita mo yung time frame and you get real time. You can subscribe to level 2 codes to view that data. So subscribe ka lang sa level 2 so you can actually look at bid ask as well if you're looking at those types of data. But more importantly, I think it's important na if you're actually trading in the US or Hong Kong, meron kang mga data like this live given to you when you open your Webull account. So nakakita ka ng charts and news in real time. So that's very useful. Kasi 'di ba, pag trading view, it's about delayed in for 15 minutes. Okay, so yan, DNN, do the same thing, click mo lang. So you can already see all the charts on uranium stocks. When check the daily. So lahat sila nag-move up last night. Ayan, no? You can see all the uranium stocks, DNN was the strongest mover last night with a 4% gain. Yan. So you can create alerts, you can draw whatever you prefer when you are or simply just put it in your watch list, no? So ako usually I just put it on watch list. So clearly may support dito sa $1. So there's several ways. How do you actually maximize buying DNN? So you can actually use sell put. So for those who really like to buy DNN, you can check out, let's say March, I want to buy it at 1. So sell puts 10 cents here. Ibig sabihin, if you sell a put on DNN, you're actually promising to get to buy the shares at 1, and then you get paid $10 today, 10 cents premium. So may makuha mo siya at 90 cents. So this might be interesting given that DNN today is 115. So you might want to actually sell puts at $1 if you're interested to buy DNN. So or actually check mo sa mga February 17, 7 cents, or take a look at January 20, ito 5 cents. So you can still get that 5% yield just by waiting a month. Kasi ngayon, December 9 na eh. So January 20, that's about 42 days. You get a premium of about 5% if you sell puts. So ganun, that's one way to actually check out the movements. Or yeah, tingnan mo na rin yung galaw ng mga call options for the next week, 7 days. Well, hindi masyado gumagalaw kasi malaki yung premiums eh, $1 and $1.50. It's a huge range for the options, and DNN is not a widely traded name. Mas marami pa nagtre-trade sa CCJ. So paano malalaman yan? You can clearly see the movements naman. Take a look at example, the January 20, for instance, 40 days. How many people are trying to buy calls? Actually, wala pang bumibili ng calls ng CCJ. You can see that the call options of CCJ are still down. So you can be able to buy CCJ calls for just $1 if you're willing to buy. So you can actually do something like buy calls and then sell calls para lumiliit yung cost mo, di ba? If you sell calls, for instance, you will receive this 69 cents. Then if you buy call, it's going to be 107. So your risk is going to be little, no? So 1.07 minus 0.69 is about 38 cents or $38 for a bullish position on CCJ. Naka-sell call 20 ka, tapos buy call 21. um, Yeah, so that's just how to utilize the Webull platform. Other news that I think that it's important to share. Of course, we've seen Macau casino stocks doubling, double or nothing. A lot of your Macau casino stocks in the last 30 days really went up. Let's take a look at the movements niyan. Of course, this December 9, there's a lot of searches on Macau traveling. So search and pre-booking of air tickets, hotels, for the Spring Festival rebounded rapidly following the announcement of new 10 optimized prevention and control measures by the State Council's Joint Prevention and Control Mechanism Group, Macau Daily reported. In addition, the Macau SAR government also announced yesterday that it will gradually adjust the epidemic prevention policy. So you're already seeing that a lot of Macau shares are rising. Of course, the biggest moves that we cannot actually no, we cannot neglect to actually explain or talk about is the movement of Chinese shares. So your H shares are actually now trading at 20,000. Let's take a look at your trading view here. And let's take a look at your Macau names. Okay, so S&P 500 opening hours pa lang, pre-markets up 1%, Nasdaq up 1%. You're already seeing that people are already a little bit bullish on the CPI coming out next week. And then, of course, volatility about that consumer price index. Nonetheless, let's take a look at your HSI here. So your Hang Seng Index has, of course, gone up in the announcement of a lot of COVID policies being relaxed and reopened. You're seeing this very strong move. In fact, closing on the monthly and weekly at the top of the curve, no? So look at the movement of Hong Kong from about 14,600. We closed at the high of the week, which is 35% up at 19.9. More importantly, the Macau casinos really went up all the way. So for the month and for the week, look at the movements here. Your Win Macau is actually trading at 9.43, coming from a low of about $2.90 here, or nearly tripling in just ilang days lang yan. 1, 2, 3, 4, 5, 6 weeks for Win Macau. So Win Macau is quite overbought, but it's very strong volume, such that if ever it falls near 750 or 780, looks like there's still a lot of demand buying into Win Macau. Quite a very strong weekly bullish candle, as you can see here. Quite overbought, but also very, very strong in terms of how it's been closing. This is your Win Macau. This is your 1928. Let's take a look at just the movements here. Sands China closes the week high here about 26.3. Already closing above your September 2021 highs. Okay, so that is quite a big move. That's like 1 to basically 13 to 14 months of high. So actually, Sands China just hit a 52-week high after breaking the $25 mark. Let's take a look at MGM China here, 2282, another casino stock. Also the same thing, broke above this 7.5 and then closes here at 850. So you're actually breaking above some 12-month highs here of MGM China. Let's take a look at your Melco International Development. Melco hasn't broken above your 12-month high, but it's actually nearing that 9.68. So very strong movements on the overall Macau casinos. We have yet to know whether this will continue going up after rising for about 6 weeks already. And over the last 2 weeks, the movements have been more than 100%. You'll notice this went from 4.9 to almost $9 in just 2 weeks. So what's very, very strong is the 14-day move of a lot of Hong Kong casino stocks. Okay, let's take a look at a few charts being shared also on Twitter by @SS Investments 8. He shared that the movement of Hong Kong stocks in November 2022 was 27%, which actually was a little bit familiar with the 1997 to 1998, which actually fell from 29% to as much as 30%. So what happened actually was after a very strong recovery, there sometimes is a pullback of about 10%, only to grow another higher move on the next year. So we'll see whether October 2023 next year is gonna be quite similar to the movements of 1997 and 1998 here, wherein it was strong and then has some downs of about 10% over months, and then continues to be very, very strong. So there might be some pullbacks on your Hang Seng, but definitely this movement is quite something to watch out for. And of course, quite reminiscent for most other people is how it pertains to the 2008 financial crisis bottom of Hang Seng Index. So in terms of PE ratio and earnings yield, how's the Hang Seng Index even at 18,597? Take note that today Hang Seng Index closed at 19,900, or still significantly higher by about 10% yet again. So you're seeing that as of November 30, 2022, Hang Seng Index rallied from 8.3x to 10.5x. So if it rallies 50%, that would be rallying towards 12x or 12 times PE. So a lot of people are looking at 12 times to 15 times as the topish area for Hang Seng Index, similar to what they're looking at for the last 30 years of data. This is your Hang Seng Index since 1992. So this year Hang Seng Index, it was on October 2022, 14,687. A lot of people find October's as one of the bottoming areas, similar to what happened here in 2008, which was retested on March 2009. But you can see that that 10,000 mark in Hang Seng Index proved to be the low. It could be that October 31 and March 2023 could actually prove to be several bottoming out processes in Chinese markets. So there's also something to watch out though in Hong Kong and Chinese stocks. Take note that the housing continues to be dire outlooks. You've got the next 10 years on housing units actually on the low end. You've got housing demand breakdown by source. Upgraders are actually going to go down. Cash compensation for town redevelopment also going down. New families from urbanization, demand is slowing down. And urban marriages is also slowing down. So housing as a sector or properties is quite in a dire outlook still. And if you take a look at properties net gearing, actually pretty high, no? So if you take a look based on total equity, most of the Chinese properties have about 65% equity or leverage based on their total market caps. And then if you check based on shareholders' equity, unfortunately, most of the companies in China are heavily levered with 100%, even more, no? 118% actually, or 115% over their shareholders equity. So they basically levered up way too much, kaya the property sector still remains quite their outlook. So this was actually the bonds during September 2022 for a lot of property bonds, wherein $100 became $20, or and then of course until the Chinese government intervened, which propped up the property markets over the last month and a half. So here's the problem though. China's corporation debt and household debt is still about, says here that the corporation debts are actually quite high at about 60%. And then corporate debt is quite high, 150%. Some people are actually assuming that China has a lot of similarities with Japan, which used to have household debts levels also very high. So corporate deleveraging seems unavoidable. Consumer finance has little room to help fuel consumption, and economic rebalancing to domestic consumption is still slow in progress. So a lot of the Chinese bears are discussing the China debt similar to Japan's 90s crash. So a lot of things are still not there to actually find a recipe for a very strong bull market in China. Now, also take a look that in the US, it's also very hard to assume that we will actually recover despite the strength tonight on pre-markets before the CPI data next week. Take note that despite inflation at about 7 or 8%, usually 7 to 8% has a correlation of a US PE ratio actually at about 10 times PE. And the higher your inflation goes, the lower your stock prices are. There's actually a strong relationship wherein if you have low interest rates or low inflation, then you have a very high PE. So the higher your inflation, the lower your stocks will be. This comes from Schroders, which evaluated the CPI inflation of US from 1973 till 2020. Also, if you check, a lot of people are already worried that next year's earnings downgrades will continue to be bigger than guidance, given that there is a tightening environment that is accelerating. So, this red line is actually your tightening acceleration. And even if your tightening will decelerate, given the consensus view is that the 75 basis points will just be a 50 basis points rate hike this Tuesday, basically, this Wednesday, December 14th. The market has shown that the S&P 12-month EPS drawdown, despite a deceleration, still moves from about 0% to about negative 10% to as low as negative 20%. And during the crisis in 2008, to a negative drawdown of negative 40. So unfortunately, your S&P 500 is just down 4% on the EPS drawdowns. So you may actually see more drawdowns in the next couple of years or quarters, even as the S&P 500 will decelerate the tightening. So there's a lot of questions about the Fed easing rates. If the Fed ease rates from 75 to 20 to 50 or 25, will the S&P 500 continue to fall down or actually start to recover? At least the data tells us that when the Fed funds rate was easing, in this case the yellow line, this is the S&P 500, wherein during the time that the Fed was tightening and then easing, the market still continued to fall down with a bottom in place somewhere in the next 1 to 2 years. So here was your Fed easing, but still the bottom came out after a year. Here the Fed was already easing the rates, but it came out after a year. So a lot of people are saying that even if 2023 that the Fed will actually ease, the only bottom will be second half 2023, or some are even saying maybe on March, but really it can't happen this December 2022, not just yet. So a lot of people are also checking recessionary times because the Fed and the US hasn't declared a recession yet. And usually without a recession announcement, you cannot actually bottom out. So you see that the S&P 500 bottoms out a few months after the Fed actually announces recession. The average is about 7 months, or it can be longer. So this is your S&P 500 bottom during a recession, during a recession, during a recession. And so we haven't seen a recession in the S&P 500 as announced. So it can happen. It can happen next year. So that was your years in 1965 to 1985. This is your 1986 to year 2005, wherein there was a recession here and the Fed was easing the rates, but the market kept on tanking. Here, the Fed was also easing the rates, but the market still tanked from 1.2 to 800. That was about 2002 to 2003. The eventual bottom was about a year after for S&P 500. So here, 2006 to 2022, if you also check, the Fed was easing from about '08 to '09, but the market actually bottomed around 2009, and then a lot of people also tried to bottom hunt around 2009 to 2010 second half. Here the Fed is also easing in 2020, so we had a bottom a few months after. Now the Fed hasn't eased yet, so a lot of people are skeptic on whether 2022 here at about 4,000 or 4,001 is actually going to be a bottom. So a lot of people are actually holding on to their cash, as it seems as if there's no market support yet. This year, 2022 analog as well. Your November 30, 2022 was 4,080. There was quite a strong movement on your November 30, probably a portion of window dressing. But you can see that unfortunately, if you use some analogs with the 1973, seems like your 4,000 can still fall near 3,000 areas next year around March 2023 if you're going to copy the 1974 outlook. The full period drop was about 45%, and the S&P 500 has just fallen something like 20%. In terms of portfolio strategies, Goldman Sachs and Bank of America Global Research, as well as Morgan Stanley, a lot of people are looking at lesser pain next year, but still no gain. So in 2023, Goldman Sachs wrote that their baseline forecast is that EPS may just remain flat and they can end the year at 4,000. Same for US S&P equity strategists in Bank of America. They feel that the year-end target is 4,000, but the targets on the earnings per share can actually fall by 10%. So it can have interest rate, they're projecting an earnings downgrade of about 10 to 15% for next year. So it seems like the S&P 500 today is still trading at 17 times, which means that you have probably a flat year or very low upside. So a lot of people are still thinking that it's better to hold cash with these types of forecasts. A lot of Chinese analysts are also warning that there still remains some loan and bond defaults. And even if stock market chaos, especially if property industry plunges into crisis, because of Beijing's determination to slash the debt levels in the sector. As you saw, 115% debt levels in terms of shareholder equity for a lot of Chinese properties. And any solution for Hang Seng is not going to be just as easy as turning the palm of the hand. Take note that China property is actually contributing 25% of GDP, and is actually 60% of the households here. Wait. Here. So in China, the property sector is actually 60% of the total household wealth. And unfortunately, since there is lower Chinese property prices, you've got potential lower overall Chinese consumption and spending for the next year or the next few years. So a large portion of household total asset net worth is actually 62% property, 20% they do have cash, a little bit on equities, 11%, some insurance and pension funds, and others at about 4%, and so on. So pretty much you're seeing that properties remain quite a large portion in China, the biggest in China, then UK, then Australia, then a little bit on Japan, Taiwan, then USA. Take a look at a few of these as well. So this is your property transactions in China. Source Longview Economics Macro Bond. You're already seeing that there's a global growth slowdown in Chinese properties, and unfortunately, the China slowdown is actually even worse than what was the shaded area during the global financial crisis here. There's a global growth slowdown here in 2011, some European crisis, a growth slowdown here 2014, and nowadays China is actually experiencing a deeper slowdown. So a lot of people are still concerned in China for these types of macroeconomic reasons. So it's highly possible that what you saw in Hang Seng is really a recovery from extreme pessimism, not really from outright optimism. So we know that China went from 8 times PE, it's now 10, 11 times PE. Sure, it can go 12 times or even 15 times, but the higher it goes, actually, the more susceptible for these outperformance to look stretched even for China. So far, there's no sustainable numbers to prove the sustainability of the rally for an eventual Super Bowl market. So also, there's a question that's also posited. Historically, if US is probably expected to go down 30% for the S&P 500 next year, could China actually decouple? And if you look at the 0809 crisis, usually a US consumer slowdown also means a China economic slowdown. So there is a post-lockdown recovery of China right now. So far it has been V-shaped and fast horse movement, but a lot of people are skeptic about it that it could actually be more of a bumpy road ahead. Today, there's also news in China that November car sales just sank 10% year on year. However, new energy vehicles are actually up 59%. So, what this tells you is that if Chinese electric vehicles are actually growing, says here that retail sales of new energy vehicles are reaching 600,000 units, a lot of people are still quite bullish on the likes of NIO and XPEV and Li Auto. Li Auto is going to be reporting this Friday, tonight actually. So with Chinese assets being quite very violent whenever they rally, a lot of people, especially investors, are still cautious, and regulatory and geopolitical factors are actually making the calculation of equity risk premiums in China quite uncertain. So that said, there's JP Morgan, who is looking to offer an active ETF that's focused on China. And there's a lot of US investors that still holds cash. Gene Munster, just 2 days ago, who also holds a lot of tech names, usually in the US market, actually shared that they're actually holding a lot of cash, 45% position, still waiting for a name for names to actually fall maybe 10% next year. Um, you can see the Bank of America just released a survey for 350 plus fund managers managing over $1 trillion. During October, the average cash level of most of these fund managers still remain very high. So this happened also in 2020, also happened in 2016, 2003, 2008, June 2012. If you actually study even December 2008 with several cash levels, the actual bottom came out around March 2009. The actual bottom still happened even in 2018. So there's a lot of people that, and here in July 2000, March 2001, October 01, March 2003, usually just because there's high cash levels doesn't mean that you have a bottom. In fact, we can continue seeing people holding so much cash, given that cash today also pays a 4% decent return. So it looks like a lot of people are hiding in cash and still skeptic of any market rallies to be sustainable. So Gene Munster actually shared in the interview just recently, about 2 days ago in CNBC, our fund is largely in cash, actually 45% cash. But I don't think you need to overthink this and just sit tight. You need to wait for earnings to come down and buy only when the earnings are getting adjusted. When will be the bottom of the market? But ultimately, he doesn't know the exact timing here. But it will be when the market will adjust for the 2023 earnings going down. It could take 6 months and will just sit in cash. So, a few things to also watch out. Most of the time, as I said, until a recession is announced, you do not have a bottom. So the duration of a recession since 1980, when you announce a recession, usually, example here, the start of announcement of recession is June 1980. It only ended about July 1981. The market actually bottoms about 7 months after the start of the announcement. So here, 1981, same thing. Here, same thing, same thing. So announcements are plotted by month in which they were made, not the precise dates. So the market's usually delayed in sharing when we actually start being in a recession. So we could be in a recession in 2021, but they'll only announce it, let's say, February 2023 or March 2023, and so on. So usually the market is quite delayed in announcing a recession, and that means that the market can also bottom out quite delayed 7 months after the actual announcement happens. So those are just averages that people look at. So here, for instance, announcement of a recession is December 08. Recession stopped around September 2010. But the market sort of bottomed at around March 2009 until June 2009. So there's a lot of data, and it's quite hard to really depict what's the low of the market, but that's one way that people are really checking on how to find bottoms. Okay, so that would be it. Thank you for watching. Today's December 9. Market seems to be in a mad dash for earnings. Sorry, not earnings, but for the Fed rate hike next week. So you're looking at the S&P 500 trading at 4,000. People still are trying to watch out on whether the S&P 500 will go as high as 4.2 before it actually goes down, given that we are still at very, very high levels here. So only two occurrences are likely to happen: above 4.2, we hit 4.3, or below 3.9, then we hit 3.8, 3.6. So since next week is quite a binary event, it's quite normal that people are actually holding a lot of cash in light of the volatility on December 13 and December 14. So that would be it. Thank you very much, and thanks for watching. Have a good day on your trading, and hope that you can open a Webull platform for your trading of US markets. Bye bye, and that's it.